Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today for our weekly wrap-up. Graham, what can you tell us about what's been going on in the market this past week?
Yeah, thank you, Stacy. Thanks for our listeners being on the call. I just think we're right in the middle of the summer doldrums, right? The August swoon. Pretty much the earnings are done. Kind of a news vacuum here, not a lot of information coming out. Usually between now and the first part of October, you kind of see a market that's kind of soft without a lot of direction. So we'll just see how this kind of pans out this year. So we saw the S&P off about 2%, the Nasdaq, that more tech focused, off about 2.5%. The Russell really took the biggest hit, off about 3.5%. Kind of the leaders on the downside, we looked at communications, real estate, consumer discretionary, all fell anywhere from 3 to 4%. But I think the real criminal here right now really are the yields. We saw long-term U.S. yields really see the highest level than they've seen in 2011. So just a massive pop in yield. So we saw the 30-year bond settle near about 4.38%.
Well, do we think that this pop that we're seeing in these yields and bonds is presenting an opportunity to an area to invest in?
I think it's definitely competition for the risk asset, traditionally stocks, right? So now you can get paid extremely well to be in bonds, and that hasn't really been true over the last decade. And you have opportunity for capital appreciation. So when you're thinking about a diversified portfolio, I think you got to pay more attention to maybe what's going on with bonds, because I know the equity investors are right now. But if I jump forward with some more economic news that kind of flushed out last week, we saw some real strength in the U.S. economy again, working those yields up, maybe concerning the Fed that they might have to raise rates a little bit more than originally expected, possibly keeping them up higher for longer. And I think we saw that in some of their minutes that came out from the previous meeting. So we saw retail sales come in stronger than expected in July. So if we looked at Walmart and Target, even though their earnings were a bit mixed, especially for Target compared to Walmart, we still saw a consumer that's really strong and feeling pretty positive compared to the last 2 years. So we saw manufacturing activity expand in Philadelphia region for the first time really in 11 months. If we look at housing starts, they jumped 3.9% in July. But at the same time, we saw home builders' confidence weaken in August. So we kind of get one and then we get, the other side. And again, we saw the 30-year mortgage rate, because yields popped up so much. That shot up over 7%. That's the highest level we've seen since 2002. If we go ahead and jump overseas and think about internationally, I think the story is in China. They're really struggling to get growth over there. And I think the rest of the world continues to want to see China grow because they consume so much. But they're struggling. We're seeing industrial production missed forecast. We saw unemployment rates rising. They stepped in and lowered some key interest rates to kind of spur the yen, prop it up a bit, if you might, and hopefully support economic activity and hopefully promote that. Hopefully that will go up with those lower rates. In Japan, though, that's kind of the opposite of what's going on. I think we have 3 consecutive quarters of growth over there. Even Europe is seeing some modest growth at about 0.3, so not huge growth, but some moderate growth.
Okay.
Yep.
Well, Graham, with regard to these summer doldrums that you mentioned, is this something that you really think that we're going to experience for longer?
Well, as I mentioned before, kind of the August all the way to the first part of October has kind of been that traditionally soft period, that news vacuum, all those little analogies that I threw out there. So I wouldn't be surprised. Look at what the market did for the first 6 months. Up 20% for the S&P the first 6 months. The Nasdaq was over 30%. So I'm not surprised to see a pause. We just don't have any great leadership right now, right? So if we can have someone step up, some leadership in the market, that might change this pattern. But I'm not surprised to see this weakness right now.
All right. Well, thank you so much for that information. And thank you to our viewers for joining us today. We hope that you guys have a great week, and we'll look forward to seeing you again next Monday on the weekly wrap-up. Take care.
Take care.